Hello traders, Gary Wagner here, just about 3 o'clock in Honolulu, 8 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, 20th day of November 2020, and this is the daily report for gold and silver, our weekend review, and what a couple of weeks we have seen with the market touching on some lows at approximately 1850 and still genuinely in a consolidation pattern biased to the downside. On today's show, we will discuss various levels of potential support, and we will also take a detailed look at the dollar. But first, to the price board. There is absolutely no doubt, traders, we have seen an extremely volatile market since gold prices reached the all-time record high on August the 10th, and that was 2,088. From there, we had some major downside pressure, but I draw your attention to our weekly chart that is at the lower left-hand side, and you can see these last 2 weeks are these red candles here. We had roughly a $100 range on last week's trading, and the market actually opened at 1871, which is precisely where it closed on last Friday. It did trade lower from there, giving up an additional $23 on the week, and then, of course, it is currently fixed at $1,859. What is most interesting, I believe, is the fact that on the last 2 weeks, when we look at these lows, they are fairly equal. Last week's low was a little bit below by $2, the low that was achieved this week, but in both occasions it came in just above $1,850 per ounce. Which means that gold futures, basis the most active December contract, gained $8.10 in trading today, currently fixed at $1,869.60. However, it lost approximately $23 on the week. Spot gold also traded lower, and it's currently fixed at $1,869.10 as the net result of a decline of about $1.22. When we look at silver, that actually had a modest gain of about 0.75%, 18 cents, currently fixed at $24.22.5. And lastly, that was all done with some mild headwinds from a slightly higher U.S. dollar, up about 0.1%, settling at 92.38.5. Besides the bullish or bearish sentiment that is contained among market participants and traders, it has been the dollar that has been a great influencer of recent changes in gold price. In fact, when we look at this daily chart, what we can see quite easily is that over the last 6 trading days, we have all seen red candles, for the most part, with lower lows or equal lows and a series of lower highs. That was up until yesterday. Today is the first green candle that we have seen in 7 trading days. Also, I have the MACD up, and we can see that the market right now is quickly going into a oversold. Traders, that brings us to our current assessment on a technical basis of gold futures. We are looking at a standard candlestick chart. Each candle represents a single day. The first thing that we have noted is that over the last, say, month and a half, we can identify a double bottom. First of all, in about the last week of September, we hit lows that were just above 1845. That's a number we'll talk about in a second. We also hit that on Monday of last week. And then again, we hit that yesterday on Thursday, although they're about $2 in terms of a differential. The low this week was just above the low achieved on Monday of last week. Nonetheless, what we are seeing is the potential for gold finding some technical support at the 38% retracement level. And traders, this retracement, as you know, is from an extremely long data set. But more importantly than that, the data set that we're using contains the entire rally beginning in the middle of March. Gold is at 1450 up onto the new all-time record high at 2088. We easily broke through the 23.6% retracement that occurs at 1940, and then on a couple of occasions we've actually gone and tested this particular price point, which means that it is logical that we could see a potential support and pivot in this area. There is a big caveat to that. If 1845 does not hold and we see further weakness next week, the next level that we would look at would be the 50% retracement. That comes in at 1770, and that has a lot of historical data backing up that this price point has some technical importance. And by that I mean when you look at the price activity in April, May, and June up until the beginning of July, this particular area, 1770, really provided a solid resistance area in which it did take a move above it, and that was really a precipitator of this tremendous last part of the rally, which took gold from 1770 to 2088. So, long story short, if we see any kind of support come in the market at 1845 and we have candlestick patterns that back it up, it would suggest we could see a bounce to the upside. If in fact it breaks below that price point, the next target that I would look at would be $1,770. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Have a safe and healthy weekend. Bye-bye.